Hello friends, welcome to my YouTube channel. Today we will discuss about what it means to buy a company stock. Stock is the term that is used to describe a share in the ownership of a company. Each share is worth a certain amount based on the overall worth of the company. When you buy shares of a certain company, it essentially represents your ownership of a small portion of a public corporation. Let's understand with a simple example. Sandeep wants to start a restaurant, but for that he needs to invest 10 lakh rupees. However, he has only rupees 2 lakh with him. He asks four of his friends to invest the remaining money. In return, he gives them each 20% of the company's ownership. Sandeep's business is performing exceedingly well. After 5 years, his restaurant is now valued at 50 lakh rupees. That means the value of Sandeep and his friends' investment has increased 5 times. Similarly, you can buy shares in a public company and become a part owner of the company. When the value of the company rises, the value of your investment rises too. Listed companies sell shares in order to obtain the necessary funds for the company to grow. This is first done through a process called an initial public offering. After the IPO, shares are sold and bought by investors on a platform known as a stock exchange. Stocks basics. How do you buy and sell shares? In the simplest sense, the stock market resembles every other market in the world. People come here not physically to make money. This is done by buying and selling shares of different companies. For instance, imagine Sarah buys 200 shares of company at rupees 10 per share. This means that she has invested rupees 2000 in company X. After 6 months, the price of each share increased to 20 share. The value of her investment at this point 4000 rupees. Now if Sarah sells her shares at this point, she would earn a net profit of 2000 rupees. Buy low and sell high. That's considered to be one of the fundamental principles of making money in the stock market. What are the types of shares? Broadly, there are two types of shares: equity and preferred. Equity shares, also known as ordinary shares, represent ownership stake in a company. Thus, as an equity shareholder, you hold fractional ownership in a company. As an equity shareholder, you benefit from the company's profit, and with a significant holding, you can have a say in the company's management. However, there are certain downsides to equity shares as well. Cost of issue of such share is high and their returns keep fluctuating. Preferred shares like equity shares also represent ownership in a company. If you are a preferred shareholder and the company decides to distribute dividends, you will get preference over equity shareholders. In other words, dividends will be first paid to you and then to other shareholders. This is one of its major advantages. However, as a preferred shareholder, you don't get voting rights as equity shareholders do. How shares work: companies sell shares to raise capital for their business. They issue shares through initial public offering in the primary market, which are then traded in the secondary market. If you decide to buy a share, you do so from another investor. Similarly, if you wish to sell a share, you need to sell it to a potential buyer. The entire trade of buying and selling shares are handled through stock exchanges with a broker representing each investor. Why invest in shares? Investing in shares gives you the chance for long term capital appreciation. Also, you can earn profits through dividends paid out by the company. At the same time, shares can be quickly liquidated should you want to sell them. If you are a large shareholder of a company, the same gives you voting rights and have your say in strategic decisions of businesses. Conclusion: investing in stocks is a great way to earn money and increase wealth. But for this to happen, the stock exchanges play a very important role. Stock exchanges such as BSE and NSE offer a level playing field for investors to buy and sell shares. What are stock market? What is the share market? When you want to buy clothes, do you approach a company directly? Not likely. You go through multiple middlemen, sometimes without even realizing it. Eventually, you hit the market and buy from the various shopkeepers, either online or offline. A share market is similar. It is where participants gather to list, buy, and sell shares of listed companies. This is where you can invest and trade in company shares. The share market is also where companies make their shares publicly available and raise money. It is different from the stock market. Yes and no. The share market is a part of the stock market. In a share market, you can invest in company shares. In a stock market, meanwhile, you can find other financial assets like bonds, mutual funds, and derivatives too available for trading. In this sense, the stock market is much larger than the share market. That said, you may find many referring to the share market as the stock market. It is similar to the way the terms saving and investing are used interchangeably, even though they have different meanings. Thanks for watching my videos and stay tuned for next video. Thank you.